Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's get right to it and take a look at the markets. We take a look at the S&P. As promised, I took all of those multiple zigzags off the chart. I did leave the original one. As you can see, it went to 161.8% extension. The next level is a 261.8% extension, which I don't even have on the screen. It's not one of the standard fib levels that I put in a zigzag because there's so few that actually make it that far. Over the years, I've been trading Elliott Wave all the way since 2001. Just haven't seen that many of them extend that far. Perhaps this does. But the main thing is I left this ascending pennant pattern on here. Actually, last week I asked you which way did you think it was going to break out. First number of comments that came in said down. Then we kind of balanced it out. So with some people saying to the upside. So it's kind of a toss of a coin on the upside or the downside based on y'all's comments. And you can see that we are just still trending right into the middle of this ascending pennant pattern off the highs of the day. So far. And by the way, we are recording this during market hours on Friday, again, based on travel and other commitments. So prices could change slightly from where they are right now into the close, but this gives you a good idea of where things are. So just right in the middle of that pennant, no breakout one way or the other yet, but very likely that we will. As a reminder, we do have an AI score here from the folks at HUBB. And if by chance you haven't heard me say this or you haven't gone to HUBB.com, maybe you're a new viewer, you can go to HUBB.com, get a copy of this software for free. You get free Elliott Wave. You have an opportunity to subscribe to the AI signals if you want, but no subscription is required to get the software for free and play around with it and see if you like it. And again, you get the free Elliott Wave. And at ewotrader.com, we give you all the rules around Elliott Wave. So the AI gives a score on the likelihood of a target being hit. You can see this is a little more than a toss of a coin, that we do go up to 652, but that's a possibility. We do have the Fed meeting coming at the end of the month. Could they surprise us with a rate cut? Doesn't seem likely now, but we did have the PPI and CPI reports that came out. I'll talk more about those when I get to the bond market. But the other news that we had that came out today was the University of Michigan Consumer Sentiment Report, and that was actually really good. Now, in fairness, the University of Michigan Consumer Confidence Report is a little bit of a smaller sampling size, so depending on who they contact, it could be skewed one way or the other, but basically it shows that the consumer is less worried about the inflationary aspects of the tariffs. And in fairness, the tariffs haven't been as high as what they were. And again, I'll talk more about the tariff stuff when we get to the PPI and CPI, but it seems the consumer is feeling better. And, we're a consumer-driven economy, so the consumer's feeling better. We're likely to continue to move up, especially with all that money we've been talking about that's in money markets accounts on the retail side. All right, so back to the chart of the S&P. We'll just have to wait and see which direction this breakout occurs. We could come down and start the wave 4 at any point in time, or we could continue up. We do have that one last fib level at 261.8, which does coincide pretty closely with this 650 target. And there's a multitude, I should say, of fib levels from all those zigzags that were on the chart. If you haven't seen them and you're new, you can go back and watch last week's recording, and you'll see that there were 4 zigzags all converging at the exact same place, which was this previous February high. We consolidated here for a bit, and now maybe we're trying to sneak back to the upside. All right, so let's jump quickly to the bond market. I'm going to go take a look at TLT, and that's where I said I was going to talk a little bit more about the PPI and CPI reports. If you've been watching, you know this, but if you haven't, when you have a zigzag pattern, my favorite of all Elliott Wave patterns, complete, so there was a downward zigzag here breaking out of this triangle. Once the C wave ends, and it came down here past 100% level, you move back and retrace the C wave. That's what normally happens when a zigzag ends. And that's exactly what happened in this old school OG of as the young people say, technical analysis, where you just draw a line connecting higher highs and higher lows, and you get just a trend channel. And we went right up to the point, the exact point where we retraced the C wave, and then we've broken down, and we broke down into a zigzag pattern to the downside on TLT. Now, as a reminder, TLT is prices on the 20-year, so prices and yields move inversely. So yields have ticked up a little bit, which we have to keep an eye on. But as prices start to tick back up a little bit from that 100% low, so we had a 50% B wave correction, should yield 100% extension, went exactly there. As soon as we touched that 100% line, we bounced back up. So yields have eased off a little bit, but this move down in price has created a little bit of a tick up in yields or rates. Maybe that's just the realization we are not going to get a rate cut in July, and the probabilities of one in September have actually dropped a little bit. I'd be real surprised if we don't get a rate cut at the September meeting. I was less surprised, I said last week, if we got one in July, but I really don't think that's going to happen. I thought it was pretty cut and dry that we wouldn't, but perhaps the Fed would surprise us. And the PPI report that came out would give the Fed some room to cut rates if they wanted to, but the CPI report that came out earlier in the week prior to the PPI report said that inflation for the month of June had ticked up a little bit, 2.7% versus 2.4% in June versus May, but the month over month stayed at 3%. But then we get the PPI report that was lower than expected. So basically what that means is that on the wholesale level, companies, producers are not seeing any inflationary effects from the tariffs or anything else. And the CPI report being just a tiny bit hotter, you have to wonder, does that mean that wholesalers, companies are taking advantage of this? In other words, they expect that the consumer is looking for inflation. They're expecting it. They expect prices to be higher. So they're keeping prices higher on the consumer price level. And when you, that's what I look at. It's the spread between the two, between the PPI and the CPI. I don't necessarily focus on either one of those reports specifically, just the spread between the two. So if you're not paying higher inflation on the wholesale level, but yet you're passing on higher prices on the consumer level, that just goes to help earnings. And we'll talk more about that when we get to the dollar as well. I know you guys like the TNX, so we'll take a look at that. And you'll see that we did have that little bit of a tick up, but we've balanced out a little bit. This is on the 10-year. The yield curve itself is pretty flat. Right now, it's not inverted, but it's not very steep either. So the bond market still is kind of in a, we're not quite sure right now. And you do need to pay attention to the bond market, in my opinion, even if you're an equities or derivatives trader, because the bond market is the biggest market. More money in the bond market than the equities market, and viewed as a lot of smart traders. Typically, the bond market does give the equities market cues. So that's where we are on the bond side of things. We'll take a look at the VIX real quick, and then we'll go look at the dollar. So when we take a look at the VIX, we are still trading just a slight elevation in volatility here. I think it's because of the uncertainty of the tariff stuff, all the rhetoric on whether or not they're going to fire Chairman Powell. And I've talked about this before. In my opinion, the president, and it's backed up, the Supreme Court said this as well, the president does not have the power or authority to fire the chairman of the Fed. Maybe with this whole remodeling of the Fed office in Washington, D.C., some are stretching about cause. And then we had on I believe it was Wednesday, we had a representative from the state of Florida that posted on Twitter that, or X, that the firing of Chairman Powell was imminent, she heard. And then President Trump came out right afterwards and said, no, that's not true. So we had a big downward spike and then an immediate upward spike on Thursday. So there was the move there on Wednesday. There was that spike that occurred when that report came out, but we just hit the 50-day moving average and came back down. So we're still in this pattern of lower highs on the VIX, and we kind of have a little bit of a descending triangle formed here as we are holding support at 15. As I reminded you last week, this time of the year last year, we were down around 12.5. Usually you get the summer doldrums, which typically have lower volatility. due to the fact that there's not as many traders. Everybody's taking vacations, etc. And that can yield the lower volume, can yield extreme volatile moves. And I think we kind of got a little bit of that on Wednesday because just that one report was enough to get the VIX to spike back up towards 20, but again, immediately came back down and closed near the low. We're ticking back down. We're getting close to that 15 level. We're at 1675 as of this moment. You can see is 1652 there, but so we're pretty close to that level. Let's take a look at the dollar. And as I mentioned, when I was talking about the dollar before, with all this commentary, and you may have seen that the Genius Act did finally pass. Took a little bit longer than expected. We'll talk more about that when we get to the crypto side of things. But I've been commenting on how I would really like the dollar to stay down here. I didn't want to lose the dollar. Part of that legislation with the stable coins, et cetera, is to help shore up the dollar. I didn't want to see the dollar go into free fall. But having the dollar lower is actually helpful for an earnings standpoint. And we'll talk more about that when we get to Netflix because they're a perfect example of it that had earnings this morning. But the dollar being stable right here, we're testing the 50-day moving average. I think this is a sweet spot. So if the dollar can stay down here, it is helpful to companies on an earnings standpoint from that exchange rate. And it doesn't hurt as far as getting too high to where it actually is a detriment to earnings from the exchange rate. So I don't want to see the dollar lose its place as the currency of last resort, but I don't want to see the dollar too high either. I know it's kind of a Goldilocks scenario, but that's what I'm looking for on the dollar. And so far, we're hanging in there. And by the way, we talk about the dollar each and every week. I've been focused on this pretty hard in our Trade Finder events that we do each week. And we do them on Tuesday at 1 p.m. Eastern time during market hours. So we talk about the markets, we look for trade ideas, and we have a live Q&A. It's a great community. And if you haven't signed up or joined us, love to have you join us this coming week. You can join us from the link on your screen now. You can go to ewotrader.com and join from the link there. Again, it's free, and we get great questions. The community interacts really well. It's a wonderful community that we have on Trade Finder, and love to have you there with us as well. All right, so cryptos are the name of the game right now, so let's get to them right away. We'll start with, and I look at BITB. I know a lot of you like IBIT. I don't found a tremendous difference between the two. I know some of you argue the spreads are better on IBIT. I still feel like they're pretty good. There's good liquidity in the options on both sides, but you made a fair point that IBIT has weekly options where BITB doesn't. But nonetheless, you can see this big move up. And we did pass that Genius Act, as I mentioned, which you would have thought would have been maybe a big bolster in the crypto space today. But perhaps this move higher, I don't like vertical moves because what goes vertically up oftentimes comes vertically back down. We got too far from the 10-day moving average. We've come back towards that, and we're consolidating nicely on Bitcoin right now, even though we're getting a little bit of a pullback today. But looking at Ethereum, when we go here and look at the chart of Ethereum, I've been opining because Ethereum has been lagging Bitcoin significantly. If it was going to play catch up, I talked about this with silver and gold in the past, and it has move up here, and then we went sideways. Looked like maybe we were going to come crashing down, but no follow through day. That's another one of the rules. You break a major moving average, major triangle, significant support resistance, etc. And when you break out, you have to have a follow through or confirmation day. We didn't get it. Right back above the 50-day moving average, and then off we went. I felt like Ethereum was going to come up. If you watched last week, you know that. I thought there was a great chance it would see 25. Well, we're blowing that out of the water today. And just another comment on the whole Bitcoin thing. Charles Schwab announced that they're actually going to be doing some trading on Bitcoin and allowing it. You can see that on your screen right now. And look what happened to the chart of Schwab with that. So even though it seemed like maybe crypto going sideways for a while kind of became out of favor, wasn't as talked about on the whole meme thing, et cetera anymore, but crypto's back. We passed that legislation. So is it a buy the rumor, sell the news? Well, it doesn't seem to be on Ethereum. Bitcoin maybe needs to consolidate a while, but it's hard to imagine that they're not going to go higher. But look what it did for Schwab on this big gap up move today, right into the wave 5 high. So yeah, I think crypto is definitely back. We'll talk about more crypto stocks that you guys asked for last week when we get to the stocks of interest. But let's go ahead and take a look real quickly at energy. UNG trying to start to climb up. I think this is an interesting place. I talked about it last week to be. We did come down in the wave 5 right into the middle of that tap box, stands for time and price projection. With this algorithm that the HUBB software uses. It's the algorithm just as Ralph Nelson Elliott wrote it, no personal adaptations to it. It's exactly how he wrote the algorithm. That's how it's programmed. And so we're moving back up from that wave 5. And since the wave 5 didn't extend past 100%, you could see where we may go back to the previous 4. And just the fact that we had just a major underperformance on natural gas, and we are the Middle East of natural gas here in the U.S., that maybe we're going to start to tick back to the upside here. We do have to beat that 50-day moving average. We're above the 10 in order to make that run back to the previous 4. But I think that there could be some rotation here as investment firms are looking for places that aren't so incredibly overvalued like a lot of the stocks are at this point in time. So I find natural gas pretty interesting right here as far as a potential move back to the upside. Plus, we're nearing the end of the summer and we're starting to get towards winter. We had a pretty hot summer. Are we going to have a colder than normal winter time? That could certainly keep a bid under natural gas as well. And then looking at oil, which is bouncing up a little bit today. So if we take a look at the chart of USO, you'll be able to see that little bit of a bid there, kind of trying to break above that 75 level here. Seems like we want to go back up and test 80 here on oil. We did have this big spike during the Israel-Iran conflict, came right back down. Again, what goes vertically up oftentimes comes vertically back down. Got too far from the 10-day moving average, all those things. But we caught ourselves right at a 50% correction. Good place to set up that wave 4, actually right on the 50-day moving average as well. So that was a pretty good, pretty logical point of support. And we've been trending higher since then, bouncing up above the 10-day moving average today. I still think we're going to stay in this big trading range between 60 and 80. I've been saying that all year, as you know. I feel like that's the trading range for this year. Maybe we're going to go out and test the upper end of that. I hate to see that because of the prices at the gas pump. For those of us who still drive combustion engines, I want to see that oil price lower, not higher. But energy may be catching a bid. It's been underperforming most of the year. And so we'll see if that continues to play out as well. Let's take a look at the metals real quick, and then we'll come back to the rest of the markets. We look at gold, GLD. We're in this big, massive triangle here. Gold loves to do this. GLD specifically. It loves to consolidate, break out, consolidate, and break out. Notice that the Elliott Wave pattern disappeared here. Because we're in a major corrective phase, and that's what a triangle is. Flats, zigzags, and triangles are corrective phases. I don't know which way gold's going to break. You can make 1,000 arguments on why gold should go higher, and maybe it does break to the upside, but with a triangle that well formed, you have to respect the fact that it could break down as well. It looks pretty interesting. I was looking at a triangle here on this, and it was just too far apart on the strikes to get the delta gamma ratio that I like, but it's coming in a bit now, and maybe it's worthy of a strangle at this point in time. $300 stocks tend to be a little bit more expensive there, but to get the deltas right and to get the strikes right, it was just too far apart. But now we're getting closer. And as I mentioned with SLV, I talked about this with Ethereum on the fact that could silver start to outpace gold because it's been lagging for quite some time. They go back and forth on who's the leader and who's the follower. We had this triangle here on SLV. We had the vertical breakout. So we gapped up, consolidated a couple of days, gapped up again. And then the AI from the data scientists at HUBB had this pegged right at this level here, a 71% chance we would go there. Not only do we go there, but look how long, for about a month, we just pegged right at that level that the AI had forecasted. So pretty amazing having AI helping technical analysis now. I'm loving it myself. And then you see the SLV continuing to move up a bit. Both gold and silver up today, but gold still, at least by the GLD in that triangle, and SLV trying to continue to play catch up. Does that continue? We'll wait and see. But pretty nice move in both the metals this morning, at least so far. And now if we go and take a look at the DIA, this is another one that I had opined about whether or not they would play catch up. Talking about Ethereum, talking about silver. It was the same scenario with the DIA. Had it underperformed the S&P, the Qs, etc. And I posed the question to you, would you rather trade the DIA? And I was back here on the likelihood that we're going to move up because it was just clean air. We had a pretty quick move down from those February highs, and we'd consolidated here. We tested the breakout, so we broke out, tested it, and then took off. Classic triangle breakout type scenarios there. And then we went right up to those February highs. So the DIA had this outpaced run for a short period of time, and now it's back to kind of just going sideways a bit, maybe underperforming. And even though I thought this was a likelihood, fairness, I talked about this last week, I don't really like to trade the Dow, so I didn't trade that move, but I find the Dow a little bit boring. But nonetheless, it did outpace and move up to those February highs, and we're holding above the 10-day moving average there. We are in a wave 5. Can it extend? We only had that 23.6, the very first fib level, which is the weakest of all fib levels, not just in my opinion, but Elliott would write that as well. He didn't really like that retracement level. And so maybe the 50% move is as far as we go for a while on the Dow, or maybe we break above it and come up to the middle of this tap box. And then the other side of the coin was the Qs. And I said, would you rather trade the catch-up move on the DIA or the fact that the Qs were the first to break their February highs and have just been trending really nicely since? I like 45-degree angle moves. Those tend to hold. I don't like the vertical stuff because they correct more. The corrections tend to be a little bit more volatile. But when you have a 45-degree angle, you still get corrections. The market moves in impulses and corrections. That's why Elliott Wave works so well. But when you have this 45-degree angle move, the corrective moves are more shallow, not as volatile. So you can see pull back a little bit there, pull back a little bit there, but nothing real significant. And so we've broken the new highs, and we're still off and running. The Qs are moving nicely. A lot of people in Elliott Wave say stay away from the wave 3 because you don't know where it's going to end. And my commentary for years has been, yeah, you can if you have a zigzag within the wave 3, but there is no zigzag in this wave 3. It's a complete mono wave higher. So it is difficult to know where that wave 3 will end if you don't have a zigzag within the wave 3. So I would agree on this, that it's hard to know where those Qs are going to find their way to the top of the wave 3. We'll see what happens with the S&P on the breakout of that ascending pennant pattern. Then you look at the IWM. I thought that if we got to 220, we've talked about this on Trade Finder a lot as well. We've actually had a couple case studies dealing with the IWM that we would likely come up here and hit this level of resistance at 220. And if we could break above it, it's hard to imagine stopping before 230 because that goes back to that retracing the C wave, which is right back there at 230. So we came down here. We tried to test the 10-day moving average. Again, no follow through, right back to the upside, holding above that 10-day moving average right now. I still feel like there's a great chance that the IWM sees 230, possibly up into this tap box above it, maybe up to 235. But I feel like 230 is likely in the cards unless something quite unusual occurs in the markets moving forward. All right, so let's go back now and start looking at some stocks of interest. And I talk about this week in and week out. I love to hear your comments. And if we take a look at Coin, this is one of the ones that y'all ask about. And just to let you know that when you post comments, I read them all. I reply to as many as I can, time and travel commitments permitting. But while I'm talking about the comments on here, and I mentioned earlier that last week I asked you, do you think we're going to break up or down out of that pennant, and started to the downside, bounced back up to the upside. It's pretty much right in the middle now. But each and every week this year, just like we did last year, we're giving away one of our free level 3 subscriptions at ewotrader.com. You can see them on your screen now. It's the time strategy, which is a sideways strategy. Statistics show the market moves sideways 2/3 of the time. I know that the directional trading is more fun, but you have to have something sideways to balance out your portfolio, I think, or you're missing out the majority of the moves in the markets. And their income derivative strategies. And then the volatility strategy, which is those triangles that I've been talking about. That's the volatility portfolio. So we catch those. You don't have to pick a direction on those. And I do have a very special way that I set up the strikes based on that delta gamma relationship acceleration that I talked about. And then the really cool stuff, the AI impulse strategy, which is where having those directional moves heavily focused on zigzags within wave threes are AI-ified, if you will. And all those portfolios, all included, it's worth thousands of dollars. We're giving away one free each and every month. All you have to do to register is be a subscriber to the channel and leave a comment. That puts you in the drawing each and every month. So won't be able to do a recording next week due to travel. So this is your last chance to get in for the July drawing. So please leave a comment here underneath. I'll post some written commentary, but I won't be able to do a recording next week. So looking at Coinbase, one of the ones that y'all ask about, and obviously with the resurgence of crypto, President Trump called it Crypto Week, and the securities or instruments, I'll call them, because big debate on whether it's a security or not. As you know, it's part of legislation that was passed in that Genius Act and other legislation bills that were all included there. Coinbase having a big move to the upside here. We are off the highs of the day, but all the cryptos are down a little bit from their opening highs based on the fact that the Genius Act passed yesterday. So was this a run up ahead of time? We got a little bit overbought on the high this morning, so pulling back a little bit makes sense, getting back down a little bit more towards that 10-day moving average. And I've looked at this during Trade Finder and in our insiders meeting for subscribers at ewotrader.com. And you can see this is a real old-fashioned pattern called a stair step. So you go sideways, go up vertically, consolidate sideways, go up vertically again, consolidate sideways, up vertically again. So you would think that at some point we need to go sideways here a little bit. And I think that kind of makes sense on Coinbase, but that's one heck of a run higher on Coinbase. So when you see that, I want to see where the DMI is, and that looks very constructive. The ADX is moving above 40, but it's still ticking up. It can go higher than 40. That's just a level that we look at. That tells you that the strongest part of the move is over. It does not mean the entire move is over. We can still go higher, just on less strength. And then you can see that the positive directional indicator is moving higher, and the negative directional indicator is moving lower. So with that, you would think that there's still strength to the move in Coinbase, although I do think it needs to consolidate here for a little bit, and perhaps that happens following today's news. We go through a little bit of a pause after all that. And staying in the whole crypto world, Riot, you ask about, and another really solid-looking DMI. Now, the issue here with Riot is that we are at a point of resistance right here at those January highs on Riot. So we're getting a little vertical here. You can see nice zigzags right through here. In fact, I can draw the zigzag patterns on there for you, and we can see what that looks like. We have a complex pattern here. And so there was the 161.8% extension. We went past that. Once again, doesn't happen very often, but we do have a complex C wave. There's another zigzag located within that here. Really great tools here on this HUBB software. And we're right at the 161.8% extension there as well. So once again, we're hitting resistance here. We're at two very extended levels on the C waves of the zigzags. So perhaps everything crypto needs to take just a little bit of a break or a pause. Not necessarily calling for a retracement, a little backing and filling maybe, but at least some sideways consolidation following all the news of this week. Getting to Tesla, take a look at Tesla, and it looks like it's trying to break to the upside. I've mentioned that there was a big move. It's a very expensive strangle. Some of you commented on an alternative, but it does look like we're breaking out an alternative instrument to put a strangle on that's not as expensive as Tesla. But all three of those major moving averages at the exact same spot, right in the middle of the triangle. So something was bound to happen with Tesla. It's trying to break to the upside. Can we follow this through? Where does Tesla close today? And what happens on Monday will be keys to see if this breakout continues. And since it's a very expensive strangle, you can wait for the breakout and just trade it directionally instead of putting on a strangle to catch the move either direction. So we need a little bit more follow through, but if we do, then it does look like maybe we are getting an upside move out of Tesla. And then that level there at 350, I've drawn that because that's where these highs were in this trend line here, connecting the lower highs. That's when you feel really comfortable that, okay, we're off to the races to the upside on Tesla. So if we get there, I think it's likely we break that level because that would be good follow through from the breakout of the triangle. But let's just give it 1 or 2 more days before we start calling this an upside breakout on Tesla. Netflix in the news today. They reported earnings this morning, and they beat on their earnings. Some commentary in there. I did want to show you this line here because I drew that last week and said that if Netflix doesn't blow out their earnings, we're probably coming back down here to this level right around 1200 where there was some consolidation right around the area where the 50-day moving average is, and that's exactly what happened today. So that arrow was drawn not today, but last week, and that's exactly the low of the day, at least so far. Now, Netflix reported pretty good earnings, but going back to what I was talking about, the dollar, one of the reasons the stock's selling off is a couple reasons. I think, one, it had a heck of a run in advance of its earnings report and got a little bit volatile. This was a nice 45-degree angle move through here, so that was good. And then we started to go vertical, and that's when the retail public comes in and the FOMO kicks in, and they're like, we're missing out on this move on Netflix, and they come in and it goes too vertical, and then we come back down. So we had a couple of things playing against us. But another reason why we're getting a little bit of profit taking in Netflix is they cited in their earnings report that a lot of the gain, it was a very solid earnings report, a slight gain, but the gain came from the currency exchange rate. That's where the difference was that allowed them to beat earnings, or they might have missed slightly. Still a decent, solid earnings report, but Netflix may have gotten a little bit ahead of itself. They're branching out into other things. I think they're in a good space, but maybe we find an area where it becomes attractive again. It just got way overvalued on this move and got a little bit ahead of itself. So just some bagging and filling going on here as well on Tesla. Nvidia, had somebody ask me, how high can Nvidia go? Well, that's a great question, isn't it? Another one that doesn't have a zigzag within this wave 3. Just a nice move here. A little bit more vertical than 45 degrees, which I would prefer. It was a little smoother, but we're just trending nicely above that 10-day moving average, maybe a little bit above it in today's trade. So maybe we need a little consolidation there as well. We'll see, but you can never count out Nvidia. And then Jensen Huang had gone to China and then came back and announced that they're going to start selling chips in China again. So obviously that meeting went really well. And that was this gap up right here when he reported that they're going to start selling chips in China again. So that gave another leg to this wave 3. We'll take a look at the DMI real quick. That ADX is getting high. It's above 50, but it's still moving up. But you do have to be a little bit aware here that once again, it doesn't mean that Nvidia can't go higher, but the move right now is not quite as strong as it was before because that ADX is so high. But we could continue higher here, and we're getting very close. And somebody asked me that because I talk about the tractor beam effect all the time, and nod to my dad, who was a big Star Trek fan. And when you get these big round numbers, it acts like the old Star Trek tractor beam where it just draws them to these big numbers. We're not quite there yet. We get more towards that 185 level, and then that gets us kind of into that tractor beam. So if Nvidia can make it to 185 in this wave 3, once again, hard to know where it's going to end without a zigzag in it. But if it can get to 185, then I think we got a pretty good chance that we're going to 200. So we'll be watching where Nvidia goes from here towards that 185 level. That'll be the key. You also ask about Applied Digital having a nice breakout move today. The key here is that we're getting back above that level of resistance. So we came down towards 10. Once again, another example of the rules, too vertical, too far from the 10-day moving average. So we came back down. When it goes vertically up, oftentimes comes vertically back down. Too much separation from the 10-day moving average. Got to get back to it. And then we've pegged around there, and we're curling up. We do have a bullish 1030 cross here, and we were able to get above this line of resistance that coincided with the February highs on Applied Digital. We'll see if we test this resistance level. Does it now become support? If so, then I think this stock could continue higher from here as well. But Let's see if it tests this level. Clearly, there is institutional ownership because it broke below 10, got down to 5. They came in and supported it. If we take a look at volume, you can see the big volume bars. That's the institutions wanting to support it. I've given you the rules before. A stock that trades at $5 or above can only be owned by investment companies, mutual funds, et cetera, that have aggressive growth as their investment objective. You get above $10, and anything that has growth as their investment objective, and which is obviously a larger pool, can own those. And if it trades below those levels for too long, then securities laws say they have to sell. And if they're not ready to dump and get out of a position, they tend to come in and support it, which is exactly what you saw here on APLD. And now we're holding nicely above 10. We came down, tested that, created a wave 4 right at the 50-day moving average. So likely that goes higher. Apple, don't know what Apple can do. There's been a lot of talk. You probably heard this. They're looking for Tim Cook's head. They want somebody that's more innovative rather than an operations guy, because Apple just really hasn't come out with any sort of cool innovations in a very long time, resting on their laurels. And they blew the whole AI thing at their last big conference. So we're in this triangle still here, a little bit of a descending triangle, but we are holding right here at the 210 level. Perhaps we can get a break to the upside on Apple and complete this zigzag pattern up to the C wave, but we've got a very complex C wave here because not only are we in a zigzag, but we have the triangle. So a breakout to the upside. A descending triangle does not guarantee a downside breakout. You've heard me say that numerous times. Statistics don't show that. Any triangle can break either direction, ascending, descending, or symmetrical. We could break to the upside still, even though this is a little bit of a descending triangle. And if we do, that would take us right to where that C wave extension is. However, if we break to the downside out of this triangle, then it brings us back to the point of this triangle. And you know that's one of the rules. At some point in time, we're going to come back and test the point of the triangle breakout. Just like with gap filling, it's likely to happen, but you don't know exactly when. Sometimes happens rather quickly. Other times it takes a while. Same type of scenario there. Sofi, which was just hovering around that $10 level. Another example of what I was talking about, very heavily institutionally owned here. And so we came down, formed this triangle right at the $10 level, and then boom, came in and supported it. And now we're off to the races here. You can see the volume that came in and kicked it up right there as we came down to the 10 level. There was your big volume spike, so some more institutional buying likely there. And again, this move is a little too vertical for me. It's had a nice run, but perhaps maybe SoFi needs to relax a little bit here as well. If we look at the DMI, same scenario here. The ADX is showing it's been a very strong move, but it's getting to the level where it's telling you the strongest part of the move is over. And just to reiterate, it doesn't mean the entire move is over. That doesn't occur until the ADX curls back down below 40. But when you get this high, we can still go higher, but it just means that the move higher doesn't carry as much strength as the earlier part of the move does. And so as you continue to move higher on lower strength, that's creating divergence. And at some point, you're going to get a corrective phase out of there. So that wraps things up for this week. Thanks as always for your attention. Leave a comment underneath there. Hit subscribe. Let somebody know if you like the channel. We appreciate your viewership very much. Have a wonderful weekend. I look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.